Hey everybody, DayTraderRockStar here, and this is the high probability watch list for the week of, and I believe it's going to be the 1st. And tomorrow I say that because today's Sunday. Normally I put this watch list out on Friday night. I apologize. I was sick Friday. I came down with the flu overnight on Thursday night. I couldn't even make it to work. I was in bed until basically this morning. And I started feeling better, so I wanted to come over to the office and get this out. So I apologize it's late. It's just been a bunch of kind of weird stuff happening to me over the last few weeks between my eye. If you're not, I'll update you on that. I have a detached lens in my right eye, and I have surgery on October 9th to fix it. So since that has happened, that happened about last week, it's been very hard for me to see my computer, everything. It's thrown off my vision a lot. So I've been, I haven't been as active as I normally am in trading. I've been trying to cover the markets and stuff, but it's very hard to read the chat. I have to actually get special glasses to read, because the one eye's messing up. I have to wear a patch. It's just kind of a messed up thing until I get it fixed. And October 9th is the date. So after that, things should be back to normal. And things are, they're still good. I'm trading as much as I can, but not as fast. And again, just not as up to date on getting back to all the information that's out there, because it takes me time to adjust and to read and stuff. So I apologize for that. If you've noticed a slowdown in the show recently over the last week. But I had some good guests on. We have always great traders who come on and stuff, and I'd like to keep that going this week if I can. But I have enough time to research and definitely pick out some good setups. And we're going to do the watch list like I normally do, and I always start off with what's called the market radar. And the market radar is basically an outlook of the markets in the next week. We'll look back, technically speaking, looking at the overall markets in general. Well, mostly the S&P 500. Okay, but we could, if there's something interesting out there. But as you can see right now, just looking at the S&P 500, it's just continuing to move up. And every time we talk about that rotation down here, the last time we talked about market radars, basically when we have a nice flag and it's holding the 20-period moving average and stochastics rotated back down, and that is a standard HPS setup. So I thought this video might be great because, to go back and really show you some great setups and then show you the setups for this week. And what I want to do that is because it's important to stick to that. It's important to see a good setup and take it, but also understand, those setups will come, but they won't be every day. So when we really do well in the market, we could pretty much pinpoint the areas. It's when, if we're long and we got a rotation up and we have a very bullish, follow through, and we're just breaking out of different things and we're holding, there's a bunch of indicators that are lining up and turning in the direction of in the favor of our trade. In this case, we'll talk about going long. Same thing works on going short, but as you can see, the overall trend is higher, and even some of the pullbacks tend to be short-lived and pushed higher. So it's more of a dangerous game to go short this market, but it can be done but you have to just apply the same rules. You have to really apply the same rules. There was actually a divergence back here and a little pullback, but the pullbacks don't last as long as the moves higher. And that's just, so we're looking at it right now. We came out of that little pullback. We bounced up. We kind of fell, following that 20-period moving average. We got into an overbought level, started rotating back down, and again, another pattern is forming here. So what can we learn of this? Right now we're mid-cycle. We were pushing back down, heading down. The market has been pulling back, and then Friday we had the options expiration. End of the quarter. There was a lot of things. I think options expiration was last week, but end of the quarter, end of the month, and we are holding inside this bullish pattern. We're holding above the 20. We're holding above the 50. The 200's way below us. There's a trend line that we could put way underneath us, and the stochastics are kind of just hovering here. We're kind of in a neutral zone here because we did have a negative bias here, but as you can see, the market's actually starting to hold sideways here. And just like back here, once you could pull back enough and then start turning back up. This just shows the strength of the market. Now, we haven't really confirmed a launch back up, and remember, our rule for determining a change of trend or a developing trend is that we have to take out the previous day highs. So that's always an important thing. Anytime we have one of these pullbacks, these little channel pullbacks, the qualifying factor will be a break above the previous day high. Now, it will happen sometimes and fail, but we want to have it, and usually I would love to have that as the same time the stochastics are getting oversold. So we need everything lining up. So if we get down there and then we all of a sudden see a big reversal candle, an engulfing pattern, we take out the highs, all this is lining up together, and it gives us a better chance of a move back up, and that confirms our uptrend. So we don't have a higher high here. Sorry for that interruption. You heard my phone there. It was my sister. All right. So again, like I said, we need to confirm a couple of things. I would still like to see a break above the previous day high. You can see a series, even though we went back here, we kind of popped, we closed a little bit lower, and that's an important thing. Another factor is where the price closes. We might push higher, but if we reverse back under some of the technical levels, and every candle has a technical level to it. It has the opening price, the closing price, the high and the low. They're the four major areas. And when you break above the previous day high, of course you want to have that high is always defined by the highest part of the candlestick. But you also want the price to close above the previous day. Well, it's always best to close above the previous day high, but if not, close above the previous day's close. And that helps too. But then there's kind of a ruling on that. What's the best and the second best and the third best? But always, and volume is important too. So all these things, as I zoom in, as you can see, we haven't really done that. This actually didn't even get through the highs. This got back above the highs, but we closed lower. So that was actually an outside day. And this one kind of didn't do much, and this one didn't do much. So we're just chopping around. And there's nothing really here that's outstanding, except that we're holding on to the 20 and we're getting oversold again. It appears to be another bullish setup. If we look back from the beginning of the year, basically it's been up and away since February with these patterns, or maybe we'll say April, flagging out. So from here, if we have some news, of course, it can always roll over. There's no doubt that we're overdue for a pullback, or a pullback would be healthy, and a move down to the 200 period moving average wouldn't wreck the market or anything. There's a lot of things that a lot of people up here are counting on, and they might want to take that hedge. I'm always thinking to myself, what would be a good hedge if we go out far enough that the market's going to retrace and maybe even take out the 50 period moving average, or come back down to this trend line if I extend it out. Eventually that will happen, and the timing on that it's going to be tough to figure that out. We have, of course, an administration that moves the market in both ways. So it's just something we're going to just continue to watch. So there's that trend line. I want to make that trend line from May low, and we could get down there, and that would bring us, just say if it happened fast, probably into that 2,900 to high 2,800 area. We're almost, we're actually, I should say, maybe to 2890s, 2860s would be better. And I'm not going to guess if that's going to happen or not. So that's the market radar, and things look good. And actually, it's Sunday, and the futures are going to open up here, and I'm going to actually broadcast them live. We look at the 60-minute time frame too. Also, very kind of not, neutral here. We could go either direction. The one thing is this channel is defined, and we're holding that channel line. And if we pulled back a little bit further, that would probably set us up down the road on both the 60 and the daily. And how far will we get down there? But this market continues to be strong, and there could be some news out there. We have trade news, we have tariff news, we have all kinds of news, political news that can move the market. So let's jump into the next portion here, and let's talk about the HPS setup. The HPS setups, again, I want to try to be the same throughout each week. What I'm trying to say is not put out anything that doesn't deserve to be put on the list. And our best trading opportunities come when certain stocks set up a certain way, and those are the ones I want to bring you. So we're going to go through right now the HPS watch list, the current watch list right now. So this is the current HPS watch list, and I'm going to go back, and we're just going to go back to randomly back here. I mean, I can go all the way back, but I'm just trying to keep them all in view from the top to the bottom. So the last one in the bottom here, like FSLR. Now, what I want to do is each HPS setup that we go on this, that gets pushed on the screen here is on here for an HPS setup, and it has to fall inside of our playbook play. First setup is the divergence setup. A couple other, second and third setup, you could interchange between a flag, a very bullish flag setup where we have a long upward trend or a downward trend, what I call a 2020 flag, where we're holding the 20-period moving average, and the stochastics rotated back down to the 20. And in the bearish side, it would be the opposite. So price would be holding under the 20-period moving average, and the stochastics would rotate back up to the 80 line. And as long as that, so that's an important level too. But again, the divergence is always a great one. So as you can see, these are some of the. Let me bring this down here. I'm gonna have to adjust this a little to look at some of these. As you can see, this was a fast breakdown, and what I noticed here, and this is the strongest of the divergences, what I've noticed here is that when the gap down, the stochastics here did not rotate or even turn over. That's a very strong setup. And actually from this, we started turning back up. So at this point, and this always continues on, we continue to make that follow through. Now, on the TradingView charts, it does not follow on the stochastics for whatever reason. There's two separate reasons, two separate charts. The price continues. The stochastics never do. You have to actually start to chart over for that. But we always pay attention to just the price level at this point. But as you can see, the price moved up. It hit our target, and from our target, it actually pulled back. Now we're only concerned from our buy trigger to our target. The stop doesn't come into play, and unless the trigger's hit, and the first one that gets hit is the first one that gets posted, and that should be the end of your trade either way. So again, there's a reason for each of these, and again, I wanted to go through these just so I could show them to you. So where do we go here? We start off at FSLR. Let's take a look at Altria. Some of these I like to rotate back in and out of. Some of these I'm in now. Some of them I continue to be in. This was a big reversal candle, and what I call a closing bottom divergence, where you see that fast candle right here came down, but we closed higher. And then this candle over here actually closed lower. So it was lower than this closing price, but the stochastics were higher. So that was it's a different way of looking at the divergence. It's, and sometimes here's a good one back here actually too. But it's a good indication, and that was a follow-through day and a confirmation, so we wanted to put that move higher. And as you can see, right from that level, right from that divergence level, we moved up, hit our target, and our target's always defined using technical analysis too. In this case, it was the 200-period moving average. Lots of times I'll use upward trend lines. If I did draw a trend line from here, and it would probably run right into that level too, and that's where we are right now on this one. But it worked out fine, and all these work out. Typically, they work out good, unless I stray from the method, And if I stray from the method, that's when things get a little shaky. But on any of these, Home Depot here, I remember this one, Home Depot. You'll see a lot of these. Now this, you can easily see the big divergence here, the low and the higher low. low, and a higher low. Perfect channel, quality name. All the things we like to have in our stock. Our trading stock that we want to trade. Let me see. Just moving this around. It's a better angle. Then I'm going to click the play button, updates. And now that was just key. I mean, that was what a move, and this is where it is today. So you can always follow through. You can always go back and look at all those setups. Just click on the, exactly what I'm doing right now. You just click on it. You go get back. It's great education to have all that right at your fingertips right there. Now, IBM, that was one of my favorites. So PKG did not work out. Let's see why. Now, I continued to hold this one. I remember holding it. Now this was a pretty decent divergence, but it was what we call it kind of a running divergence. See how we had a right here we had a low and a low and a low and a kind of a double bottom right there, and we had a little divergence and it popped and it failed, and it came back down, and then we pushed higher and we had another divergence. So all right, so I said all right, looks like we're going to go with that divergence, and we have a downward trend line. So let's put our buy trigger on a breakout of the next high, of the candle high, and break through that trend line. And that was very, very tight. It was a very tight buy trigger. I mean, so what happened was, I think I remember, it just tagged it barely. I'm not sure. Yeah, you see what happened here? It actually pulled back into the channel, and then it came back down. It didn't trigger yet. Didn't trigger. Then it broke out. It did break out of the channel, which I wanted to see break out here. And if we broke out here of the channel line right here where I wanted to break out, we'd probably have enough momentum combined with everything that it would go. But it didn't. It actually sold off into it. Then came back and broke out and then moved up to our buy trigger, effectively triggering that. But it already, that was a big candle. And then it chopped around and actually chopped back down. And then it took off. Now, I did okay on this. It wasn't a bad trade because I decided to hold on to it. But if you went with the method, you probably would have got stopped out because it was a very tight trade. And now this is actually where we're back here on this one right now. So I might even look at this again. It did come down pretty hard. And that automatically gets updated, as you know. And the Eli Lilly. That was this is what I'm back into, or I'm actually, I'm in and I'm holding this one now. And it was just too tight. Basically I wanted to get a breakout. We started having a breakout, get a follow through, and just get momentum to start breaking us out. And of course, that's the weak link in this type of trade. The breakout sometimes leads to a fake out. And when a stock has run so much and then continues, usually reversal takes out the highs. One of my best trades are when I'm able to buy the weakness. And one of your best shorts sometimes will be being able to sell the strength. So in this case, when you are breaking out after a nice continued move, lots of times you are going to get that pullback. And now, not to say this one pulled back, you can see how tight the stop was. It was just two stops. So we got a breakout, then we got a reversal. It was almost like a little fake out. And I had to stop too tight on this. The stop effectively should have been under the lowest candle of that range back here. We would never have gotten stopped out. Actually, I'm still, very bullish on this, and I expect it to break out. That actually will be I'll follow up on that one today, LLY. But that's just a good example of having a stop too tight, and that's not good. I didn't expect it to kind of just stagger along and then kind of break out, which it's starting to do again. All right, so that's that. We had a couple weeks ago. General Dynamics. Look at this. I think this was a nice divergence too. These were all, and lots of times you'll see a certain sector set up also. So this is what I call a dirty divergence. A dirty divergence. Now if I go back down here, you'll see two sets of stochastics, my fast and slower one. And they're running, the same thing we had before. We had that low, and then we kind of have a double bottom low and a pop back up, and then we're going to talk about this one right. And then we didn't get a full rotation up. We want to get that full rotation. We started turning back over, but we wanted to hold on to this because it's a divergence, and your divergence stop, which technically should be underneath the recent divergence low. But I wanted to make sure that we had tighter stops. We wanted to be a little bit more in this market environment. Remember, this was just a couple of weeks ago. And buying a downtrend and predicting an uptrend is harder, but divergence has helped do that. So as you can see, this thing took off. It took off as a divergence usually predicts it's going to do. And then this was kind of a triple bottom, dirty divergence. It was very sloppy in the making, but we had that trend line. I don't know, it just looked good to me. The divergence was there, and then you can see the power move that came from that. Unbelievable. It was just a beautiful move, and that's what you're going to see after divergence. That's what I want to bring to you. And then again, the JP Morgan, the last one here. This was a flag, and I believe this was the little pennant area, and I was just doing a breakout of a tight trend line. Now this wasn't a divergence. This was not a divergence. We timed it right, and we got a big explosive move off of that. It's amazing, huh? It's important to get support and resistance. So we got our big move, and we'll move right up into our profit zone, and right from there, it reversed. I mean, great trade. Great, absolutely awesome setup there. Can't explain why it pulled back. Don't care. It doesn't affect us anymore. That was a trade, and it was important to actually every trade you have to have a plan. You have to have a trading plan. Reason you're getting in, a reason where you want to get out. Make it a business. I always strive about that. Over years and years of myself trading, eventually I given into knowing what makes me tick and what makes me a better trader is to be so organized. And to be organized for me is to outline things and basically make a business plan out of things. A business plan for me is what type of stocks to trade, how to do my scans, how to do my research, where to place my buy orders, where to place my stops, and everything becomes this business plan. That holds me to my game, and it prevents me from getting crazy and taking gambles and doing other things, especially when it comes to, really consistent trading. There will be times, of course, I get into cheaper stocks on gambles, day trades, we try to get into momentum trades and stuff. That's all kind of a different thing. But when we talk about anything that ends up on this list, this is for more quality companies and more, stable investment ideas. A little bit longer, but you're still going to have a length. This is not go long here, hold it to next year and get out of it. It's go long here. The average trade here that I like, and for me always talking about is 3 to 5 days, 3 to 7 days. Within that period, I want to see the biggest and fastest move out of a divergence, and we normally get it. Sometimes it takes a little bit longer. Sometimes it goes right off. It takes right off. All right, this is the end of part 1. Part 2 is going to be a members only portion. It's going to have the new setups for this week and the reviews of the ones that are currently active and all the new ones that I'll be going over. I'm going over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 stocks I'll be going over. Some of these will make the list, some of them won't, and we'll take it from there. All right, so this is part 1, and stay tuned for part 2.